Hey guys, it is Julie here with JT Wealth. In today's video, we're taking a look at two SPACs that just recently announced mergers with companies in the space industry. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we're looking at two space-related SPACs who just announced their mergers on March 1st. Last year, it seems that the electric vehicle industry was a hot target for SPAC companies. Now, recently, we're seeing the space industry start to pick up a lot of momentum. So today we are taking a look at the SPAC mergers with Spire Global and Rocket Lab. We're going to take a look at what each of these space-related companies do and the details of those mergers. And just before we get into all of that SPAC information, I just wanted to share an exciting announcement that I've started doing a daily pre-market update over on the TipRanks YouTube channel. Now, this is just a quick video to bring you up to speed with what you need to know before the market opens. I will be hosting this Monday through Friday, posting videos normally around 8 a.m. Central Standard Time. So make sure to head over to the TipRanks YouTube, hit that subscribe button, and show some support. Okay, now let's jump right into those space SPACs, starting off with the reverse merger between Spire Global and SPAC company Navsite Holdings. Navsite Holdings trades under the ticker NSH and saw a spike up yesterday after the merger announcement to $12, but is now settled back down and is trading around $10.85. Spire Global is a space data collection company. They collect, analyze, and enrich information gathered from their custom constellation of satellites, using it to create a priceless repository of insights not available elsewhere. Their customers rely on their industry-leading hardware and intelligent analytics platform to affordably drive decision-making, from setting internal strategic direction to building tools of the future for their own user base. Their technology is used in a variety of industries, including maritime, weather, aviation, space services, federal, and earth intelligence. This reverse merger between Spire and Navsite gives Spire a pro forma enterprise value of about $1.2 billion. The transaction is expected to close in the second quarter of 2021, and after closing, the Navsite ticker will transition over to Spire Global under the ticker SPIR. Now, Navsite has about $230 million cash in trust and has raised $245 million in PIPE commitments. Most people are familiar with SaaS as software as a service, but with Spire, they are seeking to help solve some of Earth's greatest challenges by pioneering the space as a service model. They want to inspire, lead, and create the business of space-based data. With Spire, they collect data from space one time, then they refine that data, and then can sell it 1,000,000 times. That data is collected by their proprietary LEMUR, or Low Earth Multi-Use Receiver nanosatellite, which shown here is no taller than a bottle of wine. All lemurs are manufactured in-house by Spire, and they have a full license to operate on a commercial basis in multiple jurisdictions. There are multiple sensors hosted on each lemur nanosatellite, reducing the production cost for each data type and allowing optimization of data production across the entire fleet. Currently, there are over 141 nanosatellites launched. Spire says that there is a significant growing demand for space-based data driven by rapidly growing adoption of data and analytics. Their total addressable market between orbital services, aviation, weather, and maritime is expected to grow up to $91 billion by the end of 2025. And the long-term opportunity for weather forecasting is much bigger than that, as they say the opportunity for weather forecasting today is a fraction of its full potential. Weather variability creates $3 trillion of economic loss per year, which is expected to grow 60% by 2050 as a result of climate change. Their growth strategy is to accelerate market capture with an investment in sales, marketing, and product development, expand into new geographies and verticals, expand their proprietary datasets in SpireSite Analytics Engine, and extend their capabilities through mergers and acquisitions. So a lot of great growth potential there, and a SPAC whose price has not jumped up too drastically as of yet. Now, the second SPAC merger we're taking a look at is between Rocket Labs and Vector Acquisition Corp. Vector Acquisition Corp trades under the ticker VACQ and has seen a bit more of a jump than that previous SPAC, currently sitting at $14 per share. Now, Rocket Lab says that they are redefining how we access space, using their Electron, which is their latest launch vehicle, delivering small satellites to low Earth orbit at an unprecedented frequency. The numbers behind this SPAC merger are a little bit larger, as their pro forma equity valuation is expected to be about $4.1 billion. The transaction will result in $745 million of cash to the balance sheet to help fund growth, and is funded by a combination of cash in Vector's trust account and PIPE proceeds. The transaction is expected to close in the second quarter of 2021, upon which the ticker will change under to RKLB. Rocket Lab has something in common with Elon Musk's company SpaceX. As they say in the history of spaceflight, those two companies are the only ones to have delivered regular and reliable access to orbit. They are a strong first mover in a small launch category and have had 18 launches since 2017, with cadence increasing. They're expecting their market to grow by $1.4 trillion by the year 2030. Rocket Lab delivers the first dedicated ride to orbit for small satellites, providing customers control over launch schedule and enabling tailored orbits that cannot be matched by large rocket rideshare. They say that more than 50% of small satellites launched in the past 5 years were delayed from 4 months to 2 years, and large rockets do not provide adequate control for many small satellite orbital destinations. Rocket Lab plans to offer frequent launches with 132 launch slots every year and tailored orbits where small satellite customers are in control of their exact orbits. To date, they have deployed over 97 satellites, and they have 180 3D printed engines delivered to space. Over 18 missions, those 97 satellites deployed have been from more than 20 organizations, with about 50% coming from commercial, 20% from civil, and 30% defense. This is for companies such as NASA, DARPA, Black Sky, Canon, and Spire. That's right, Spire, the company that we were just talking about earlier in this video. Rocket Lab has actually helped launch some of their Lemur Nano satellites. The key to Rocket Lab's launch frequency is reusability, as Electron is the only reusable orbital-class small rocket, which enables higher launch frequency without having to expand their production. Their current bookings for 2021 represent 90% of their forecasted revenue, and by 2025, they're expecting almost $750 million in revenue. With this, an adjusted EBITDA break-even is expected by the end of 2023, with a significant ramp-up there afterwards as the company scales their operations. This will lead to significant free cash flow generation by about 2024. In other exciting news, they also have plans to visit a few planets over the next few years. As they were awarded a NASA capstone mission to the moon launching in 2021, they're doing a private mission to Venus to search for life, which is launching in 2023, and a mission to Mars, which is launching in 2024. So some pretty exciting trips planned there for Rocket Lab. So there are our two most recently announced space-related SPAC mergers. I think both of these offer a lot of great potential, but I'm also excited to see this trend continue and see what other interesting space-related companies we're going to see come to market in the following year. Now, you guys know I always love hearing from you, so make sure to leave your thoughts in the comments down below. What do you think about these two space-related companies, and which others have caught your eye lately as well? Keep in mind, these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision needs to be based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope to see you over on the Tip Ranks YouTube channel first thing tomorrow morning. Cheers.